Best way to characterize this market is a bear market rally that also, the bulls also thought they were in charge of this market with some stealth bull market price action. The volume was negative on the futures on the day. There was more selling volume than buying volume on the ES and the NASDAQ, yet the market, NASDAQ rallied almost 3%, 428 points. And this price movement indicator was much lower, so that's indicative of bullish price action. The trend is bullish, and oftentimes when the market rallies this much, it's good to trade it, but it's a very choppy. You see all night long the market had wide-ranging chop, and then there was about a burst right here for 45 minutes, and then a lot of chop, which mean reverted here, which ended up being a head fake and a higher move. And so we had some strategies to get short right in here. Momentum reversal, VSD breakout. I think a more normal market environment with less liquidity from the Fed would have had more of a give back, but instead it rallied. So mid for a challenging day. Let's look at the results on the day. Gave back Friday's gains plus 150, so we're back to where we were on Thursday. These strategies are up on the month though, about 3K per micro and about 30K per E-mini. I'll post the portfolio calculator at the end of the day. So minus 1300 and minus 2600 on the 2 micro setup. The 50K portfolio is, this is an old set of strategies that we're not trading in the 50K, about the same. It was minus 1235 on 3 trades. The 200K portfolio, minus 1,000. The stock indexes in gold were the weakness today, while crude oil and natural gas did really well. Ukraine and Russia, I guess, newsworthy events potentially causing higher prices here. Also think there's inflationary pressures, so I think we had a one-off day. We don't typically see nice trends like this in crude oil. I'm going to show you those trades here in a second. But ES and NASDAQ minus 1937, minus 1845, gold minus 1850, copper and soybeans average days. Let's look at the crude oil trades. Then we'll go back to the micros and look at those. This gap fill in reverse was the trade of the day. Crude swing, holding long and all this chop, and then cover crude aggressive and conservative, capturing a small trade there. Natural gas capturing this dip right here. And so let's look at the micro trades now. This is one of the more challenging trades based on 8 contracts on the micros. VSD long short. Set up to, I thought we were set up to go short here. And several times I thought the market should have rolled over. Like I said, a less Fed stimulated market would probably roll over. One of those patterns that moves higher instead of lower because of Fed liquidity. And let's see, we had gap continuation. We have long and shorts, both lost today in the whipping volatility. This is typically a $700 stop loss. Would have needed a much bigger stop loss on this trade. We got stopped out at 14,689.50. Would have needed 14,656. Another 30 points or so. Another $600 is a $700 stop loss on the mini, 70s on the micro. So $1,300 or $1,400 is what you'd need to have held this longer. And this would have exited. This is a time exit, so it would exit right here. So it wouldn't have been a big gain anyway. 14,769. Got in at 14,724. I guess 45 points is $900 or 90 in the micros. And then we had a Cobra 3, 13th loser in a row. Stopped out here. A PR breakout, a long stopped out. A VP1, a long stopped out. Tick pullback, a long that was stopped out. Tick pulse, a long that was also stopped out. Just tough to adjust for this volatility. Need 30 and need to increase our stops by a factor of 2 or 3x to have captured the trades on the day. But you have to keep in mind that this portfolio is up on the month, and so these strategies are working on the month, just tough day to day. So cover 2022 minus 560, momentum reversal, down on the day on 8 contracts. Both of these trades. This is one of our top strategies last week, catching the long reversals. It caught a little bit of a short reversal here. Tried to catch the short reversal. I thought those were some good trades. I thought those were some good entries, but they were stopped out. And so down on the day, good day to start tomorrow. If you haven't, it's in a drawdown. It's in about a, I think it's in a $2,400 drawdown. out of about 4,000, but I will update the portfolio calculator. We are changing the tick pullback NQB, this strategy right here, from a $30 stop loss to a $200 stop loss on the micros, and from a $300 stop loss on the E-minis to a $2,000 stop loss on the E-minis. So that's the only change for February, and we will this rally could set us up for some nice short trades. Oftentimes in these bear market rallies, it's hard to continue to short it when it's down. So if it opens up higher and rolls over, we could get some good price action to the downside shorting this market. So looking forward to that potential, looking forward to a big day. We haven't had one in a while, and so the potential for some good short trades to kick in and to have a strong February exists. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.